Welcome, Gowinvest family. This is our 101 series to learn everything about investing from the ground up. I'll be teaching. My name is Sobi Kenobi, and I've got the right tools for the job. I've got a pen, I've got a camera, I've got a headset that gets good audio, hopefully. And we're going to start with our first session, which is on order books. All right, cue intro. Okay, so lesson 1. Order books. Well, what is an order book? And basically what it is, it's a graph, and it kind of looks like a book. Okay, and right here at the bottom you have an equilibrium price. Okay, and here on this half of the graph you have something called asks. That's people selling shares or crypto or forex contracts. It could be really one of many different asset classes. Let me write them all down. Could be shares, coins, or contracts. Okay, and here underneath, this is called the bids. This would be on this side of the graph. So you have asks on this side, bids on that side. Underneath here, you have a kind of like a timeline thing, but this axis is in terms of price. So let's say if this was $20, this would be 19, this would be 21, and so forth. Over here, what you get is quantity. TY, and it could be one of these different asset classes. So let's get on to starting off with what are bids and what are asks. So I'm going to give you an example here. Imagine I have a car. Okay. Vroom vroom, kind of like basic car. I'm not that good of an artist, but I think this will do. All right, put some nice headlights on that. All right, assume here that I have an idea. I want to sell my car for $2,500. I think it's worth about $2,500. That's what I'm listing for. That's my ask. I'm asking $2,500 for. Now, is that going to be what it's going to close for? No, people might bargain it down. I don't know. I'm just asking. Let's say somebody comes along, big guy, he wants to buy it. He looks at the car, thinks, it's not worth $2,500, but he can do $2,000 for the car. That $2,000 is what's known as a bid. A bid is what he'll bid for the car. So he'll tell me, hey, I want it for $2,000. Now assume there are more people selling a similar type of car. Some people can see that he's bidding $2,000. They might say, you know what, you can buy it from me for $2,300. You can buy it from me for $2,200. Okay, and then of course he's going to go with the lowest offer here. So that is going to, in our case, move our equilibrium price to the left in that case, because the price will close down here, and now everyone is forced to think that that's the value of that particular car. Now assume instead of that, we have, instead of extra sellers, this eraser is not going to work that well, but we'll try. Okay, so assume instead of that, we have more buyers. Okay, so buyers come in they see that there's no way this 2000 will buy my $2,500 car, but they're short, they want to buy a car, so they're going to bid something more than that. So somebody says, I want it for 2,300. Someone wants it for 2,400, you know? And say I agree with the highest price. I want full efficiency there. I want to get the most out of my money, so I'm going to sell it for the highest price. That's going to push it up on the scale. So you have the equilibrium price closing in favor of my asks. So that'll push it here. And it looks kind of like a tornado with a spinning eye, basically of how many bids and asks there are. And so let's kind of go on to a real world example of this. So over here we have the crypto markets, mainly because it's around 5 p.m. over here, and 5 p.m. means the markets are closed. But the crypto market luckily stays open for forever, basically 24/7. So here what you got is your bids. These are people who want to buy crypto, and these are the prices at which they want to buy crypto at. Here is the asks. This is the people and how many people want to sell at which price. Okay, let's go back and write down a proper definition of what an order book is. So my best definition would be a measure of all cumulative, O-A-T-I-V-E, I don't know if I spelled that right, but cumulative visible or limit orders as cumulative limit orders on an exchange, or on a platform, rather, for an asset. Okay, so I'm back. Sorry for that little break. What we got here is an order book is a measure of all cumulative visible limit orders on a platform. It was an N because it's not an exchange, but on a platform for an asset. Let's go by that step by step. Cumulative. What does that mean? It means that you kind of add them together. So a person who's probably buying or who's selling rather at 1910 will also sell at 1920, will also sell at 1930. But the people who are selling at 1920 will not necessarily sell at 1910. That's why you don't get sizes per price value, because it's going to fluctuate very randomly. Rather, you tally them all up and you show them like that. Same thing with the people who are buying. The people who are buying at, like, say 1890 will also buy at 1880, 1870. Those people will also buy at those prices. So then it kind of grows buyers over here. Generally speaking, if we have more buyers on this side than we have sellers on this side, generally the market should go, equilibrium price should be pushed this way. If this size is more bigger than that size, it should push that way. I mean, this is very general cases, and I'll show you why that wouldn't be the case, 100% of the time. Let's go on to the next step. Visible. What does visible mean? Well, it's the same thing with the platform. The platform can only show you what's on its platform. Coinbase cannot show you the order book per se for Binance, because they might not have their information public. They might have their own data that they're running to. And so this can only show you what's running on Coinbase, not on any type of other exchange. So that is limited by that platform. Now, the reason why I don't say it's an exchange and why I say platform is because you have things like NASDAQ Total View, and that will show you all the orders for any exchange that is buying NASDAQ stocks, puts an order for a NASDAQ stock, and they subscribe to NASDAQ Total View. They see everyone else's orders regardless of what platform you're trading. You're trading on Robinhood, RH, you're trading on Webull, you're trading on TD Ameritrade. All of them, if they're using NASDAQ Total View, they have access to that information wide. And the thing is, if you do it on a limited exchange, let's say a Forex market like Oanda, OANDA, it can give you an order book, but it's only giving you the order book for Oanda. Not every Forex trader is trading on Oanda, so your data is going to be buggy, and it's not going to be a good reflection of what the market's making. The second thing to notice is that this is just the limit orders. So let's say these are people who've already made up their mind of the price. You know, some people make up their mind on a whim. If I do a whim and I don't have an order price, basically, I don't have a price at which I want to buy it at. I just think the current market price is good enough. I'll put in a market order. I'll buy it anywhere around this price. I'm putting in a market order. And that market order will close into the asks. So if I say I want to buy a car regardless of what it's worth, and then if I say that I'm selling my car for $2,900, that person is going to pay that $2,900 because he just really wanted a car. Market orders are placed also for companies to make some money, because a market order, the person doesn't have an idea of what they're going to be paying for this, so they can charge some fees, some transaction fees. These will be non-transparent transaction fees, but what they can do is they can match you to a pretty high ask, and they can say, you know what, we want to take some fees out of that calculation, so we matched you up with a pretty high ask, and for that we're going to take a little bit of cut. That's why market orders, I really do not recommend them. I do think that you should have plans of actions for entry and exit. That means setting stop losses and everything, but we'll get to that next or later. So here, the reason why I teach you about the order book is because it gives you the most up-to-date information alongside these things, which are current trades. So you can see here trades come in at what size and whether they push the equilibrium price up and down at what time. Even Webull has something like this for the stocks. If you're in the app, you can probably see these trades go through in the app. And in fact, you'll see this like little line bar where it'll show you red and green, and you can visualize this tug of war between the buyers and the sellers in real time, or as real time as it gets. Over here, you can see the sizes at different strike levels. You can see it's non-uniform. It kind of goes in a bell-shaped type of curve. And same here with the people who are buying. These are sellers, these are buyers, but it gives you the same amount. What can you do with this information? Like I said, on general idea, if this is bigger than this, it's moving up. If this is bigger than that, it's moving down. Only if you have a pretty good view of the market, because there could be some shadow players, some people who are in hedge funds who have some money that are selling it, you know, out of nowhere, who are importing money into the brokerage and selling it, or selling it on some other broker. So even though this is getting live information, this value might not correspond to what's happening, because if a whale, someone who is might be running through a dark pool or something like that, starts selling, it will not be reflected here. It's not, in this words, visible. Okay, so it's not visible here. I think we talked about everything else. It's and the asset being any one of these particular classes are considered the asset. I know it's kind of messy here, but let's go on to some actual data that I've been collecting. So I've collected this Ethereum Data days, basically getting the bids and asks every 10 seconds. I'm getting the current price, SMA, RSI, MACD. We're going to go through these indicators in a little bit, but that's to give some trend. Really, the thing that's, you can see that these rarely change per the minute. But over here, this is the information that really changes second by second. So I go 10 in the asks, 10 in the bids. I've been collecting that type of data for a few days here. You can see in this particular thing, let's go back to the stocks over here. So this would be UVXY. It's a particular stock that tracks the inverse of the market. So I'm going to open that. You can see with the stock market, the sizes are fixed numbers. You can't have a fractional share, not through a normal exchange anyway. There are certain brokers that are trying to issue fractional shares, but the general means of transaction are full shares. So that's what they're showing you there, is the full shares. You can see here that I have similar information for all of those things. Now, what I do have is a script called Stock Simulator, and I basically simulate out these data sets. I'll open up the Stock Simulator 2. And we'll go through coding later, so don't worry about this if it's kind of giving you some anxiety about, like, oh, do I have to learn coding or not? No, you don't have to learn coding. It's really to kind of give you an understanding. If the whole idea is to take emotions out of trading, because say you're fearful and you sell, and if you're not fearful, you buy, you know, it's just easier if you have a strategy to automate it, to test it, back test it against data, to make sure that you're getting an over 50% win rate. It's very hard to get a 100% win rate, but I can show you here. This is the simulator that I have to test out the stocks. It does test out a few days here. It goes all the way up to day 20, maybe even 21. But basically, if I run this, run module, you can see that it's running some sort of generational algorithm, and you'll see it improve generation upon generation, and we'll see some sort of result. So while that's running, I'll tell you that I already pretty much trained some models, and there were some models here. I want to make sure that this is in a separate file, because if I run this, it'll probably kill that. So let's open up a new idle for that. Okay, so we have a new test for that, and we're going to go through recent file, go to the Stock Simulator 4. Now, this is showing you from what I trained. And this is no like magic show. It's pretty much a cooking show where we've kind of built it in advance, but it should generally be the same, and we'll go through it later on. But say here we have day 36. Day 36 is way out of my training set of maybe 20 days. Let me go back to StockBot. That would be TDBot and RNN. Down here, you'll see all the UVXY days, and you'll see the winner feed forwards. These are the tests, but day 31 onwards really hasn't been trained. So we're going to start with maybe looking at 31. Let's see how well it did. And we see that this orange thing is how the stock did. This blue thing is how the bot did. The bot made more money. We're going to test it out again with day 32. And run it. Run. Okay, we see that originally the bot, and the thing I was trying to do with this is UVXY has an inverse pair called SVXY, so it would, when it sees periods of volatility, might switch over to SVXY and switch back and forth. The ideal way is to figure out how to switch back and forth to make the most money. In this case, it was kind of losing per the day, but eventually ended up overall positive. Now let's check out day 32, 33, run. Okay, here you see the stock went down, and the bot still made some money on that day. You can do it on day 34. And let's run the module. Okay. We can see this is how the stock did. This is how the bot did. Always making money. You'd think that that would be easy, but this number of transactions per day will result even in those cases where they say $0 commission trades and commission-free trading and stuff like that. They stuff in transaction fees here and there. You're going to be losing on transaction fees. I've tried this already. I'll talk a little more about that in the scripting feature, but for now, let's get back to the thing that we were testing in genetic algorithms. So you can see here, first it was making an average loss of $91 with a standard deviation of 136. Then it started making a loss of only $35 with a standard deviation of 141. You can see it germinate into new generations with new values, and currently on average it makes 125. Again, this is over the assumption that we're using $10,000, which I usually put as the cash for my agent. So this is how much it's making on average with this much standard deviation, and the best algorithm is making $723 a day off of $10,000. Now, is this consistent? This is on only this data set of maybe 20 days on the market, and it's constantly being fitted. It's getting better and better, but all I'm doing this is kind of showing you that this bid and ask spread, if you wanted to give a bot or yourself the most real-time information, you always have to question your assumptions. So say I might think that this might rise, but what is reality telling me? So even though I might think it's rising, I need to look for evidence that can either bolster my position on it or contradict my position on it, and see what is the counter, basically what is the counter argument to what I'm going for. So say if I have a bullish thesis over here, I need to see, hey, there's more buyers than there are sellers. I think that at this point, wherever it's at currently, that we're going to make a green candle. So let's check this out. Let's see how the orders come in. Again, this is not a full view of the market, so I might be wrong here, but you did see a few buying pressure candles come in. It does still seem that there's a lot of selling pressure and it's following the general trend of downward direction. So this really matters little because even though there's a lot of people trying to buy it, trying to push it up, the selling pressure is not correctly represented by this graph of sellers. Coinbase is trying to basically hold up the value, but it might be being sold somewhere other than Coinbase to put that pressure downwards. And thus you can't trust this. But yeah, so generally if you have this much buying pressure, you should see it turn green. You should see green orders come in. But then there's people who just abruptly sell. They don't sell with a limit. And if they sell abruptly, it'll go down regardless, and it won't even report here. And if people buy and they don't buy with a limit, then it won't be shown here too. So there's a few reasons as to why that might not work as possible, but that gives you a full view of the order book. The order book is the most real-time indicator. You can run candlestick patterns. That'll give you maybe 2 or 3 minutes out of current time. So 2 or 3 minutes lag. If you run an SMA, 5-point SMA, you're 5 minutes out. If you run a 10-point SMA, you're 10 minutes out. If you run a 20-point SMA, you're 20 minutes out. So the most up-to-date information you're getting is 20 minutes old at that point. So things you have to consider. If you want the most real-time information, you're looking at the order book. Next, we're going to go over the candlesticks patterns. So I hope you guys enjoyed today's lesson. Hopefully you learned something, and if you learned something, click the like and subscribe button below, and I'll see you next class. Thank you.